Welcome to Daily Stock Review. Today you get to ride shotgun with me while I go through hunting for stocks. The goal of this channel is to uncover the world's best stocks that have 100x potential by reviewing 1,000 stocks in 12 months, roughly 3 a day. If that sounds good, subscribe to come along. Who am I? I'm Jack. I'm an individual investor on the journey. I'm just 2,500 hours in over the last 7 years, and I'm sharing what I learned along the way. Here's my investing process. So today we'll go through where to look and where I'm looking at the moment, and the 5-minute check to see if any of these stocks are worth looking at further. These are the guys I learn off. They did pretty well for themselves over the last little while, and by following the breadcrumbs they've left behind, we should be able to follow in their footsteps. If you guys like the free resources that I wish I had when I first started, check them out, link in the description. Otherwise, let's get into it. So today I'm going to use a bunch of free tools and resources and information. So everything that's here, you can jump onto the old Google, type it in, and get all this information for free. So I'm on FinViz, and all I've done for my screen at the moment is small caps. So anything under 2 billion. Anything that is sales growth for the past 3 years, so over 30%. Which should find some businesses that have started to hit their stride at least. So 30% over that kind of period is not too crazy. But it's more than a lot of other businesses. And I'm going to go by sector because how this site breaks up these is lots of different ones, but today going by sector just keeps your brain in kind of looking at specific types of businesses. If you're going to financials, you're looking at something else. If you're looking at some other ones. So industrials, I tend to like. And I have been through part of this screen before. I've nitpicked out what I thought was going to be the best to try and find the best, I guess, the big gold nuggets. So for instance, American Superconductor I picked up because when I had a look at this screen, if you guys can see this market cap, we've also got some return on assets, return on equity, return on invested capital. You don't need to pay too much attention to these, but usually it's a pretty good sign if most of them are positive, is a good start. And then the other one is gross margins. So making sure the business has really good margins, hitting the bottom line of the business is really good as well. Now, as I've gone through some of these haven't calculated correctly, or it's just trying its best to look at the financials that have come through. Some of these don't actually, in their reports, aren't actually broken up nice and neat for the software to be able to facilitate that. So it's tried its best. What we're going to do now is pretty much start from the top and work down through the list, because what the best investors do is that's what they do. They set a pretty basic filter. Some stuff is they just start from all, small caps, if that's where they can actually look, and start from A to Z. So we'll go through the ones that we haven't and see what we can find. Another one is another business that I came across was Adyen, which I've seen as payment or point of service or point of sale, at a couple of businesses around where I live in Australia. So I know that they're becoming more and more, present through small consumer-based businesses and things like that. And so I thought I'd check it out as well, because another investor that I follow has put it up as a potential interesting business to have a look at. So we've got that one in the back pocket as well. So first of all, let's have a sticky beak through these ones. And we can see here, like I said, the profit margins aren't really going too crazy here. Like we said, Acacia Research Corp. Now, some of these aren't going to be all that exciting. So I like to have a look at the price over time. It gives me a bit of an indication for how long the business has been around for. Because all I want to do is perform a 5-minute check. I don't want to be spending forever reading an annual report for a business that isn't really worth my time. And then that's all I want to do. Try and find that annual report, give it a read. All right. Now, once I get to the annual report, I can see this one's in the 10K format. So there's usually a quick link. And I just want to get to the financial statements. I don't want to have to read through the whole annual report to try and understand what the mode of the business is and all this. What I want to do is read the financials, because Warren Buffett has said the financials are the language of business. So you can tell a fair bit from it, and if it's if it's too early to get into a company, you usually have a pretty good indication of that. Or if there's other bits and pieces, it looks interesting, it's got a good general trend, and we want to keep an eye on it, for instance. Now, I want to have a look at the income statement. There's 3 things I'm looking for. Mastery. Has it mastered its customer? We should be able to see increasing revenue, which is why we're looking at growth. We also want to see margins in the business for its moat. And as it establishes that moat, we have a better indication for how long this business is going to last in the marketplace. Pre-revenue businesses, you can talk all you want about moats, but Google wasn't the first search engine to hit the marketplace. And Amazon was definitely not the first business to jump into the market. And by looking at those businesses and seeing when they started to hit their stride in terms of cash and free cash flow, is a good indication for when to jump in. So let's have a sticky beak. We've got revenues here, and we can see that previous year we've gone from 122 million to 285, but they've got 4 different revenue streams. So they've got intellectual property operations, which has increased a lot. Industrial operations has stayed flat. Energy operations has increased a bit. And manufacturing operations has increased a lot. So interesting to see, if we do a further look into the business, we want to see what generated this increase. Was it getting significant contracts and things like that, one-off kind of big lump sum kind of payments, or what? I then want to have a look at what kind of margins we're talking about, because the business back on those screens, we'll have a look at some of these, it'll get the totals and then look at it back up. But if we see one of these revenue streams making a huge margin and we can see it's growing and they've still got these dead parts of the business, which will keep being smaller, that's usually something to keep an eye out for. And that's why we can beat the market, by looking when no one else is looking. So intellectual property cost is 50 million versus 78, so you get to keep pretty much $3 out of 8. Industrials is about half, so you get to keep 5 out of 10. Energy operations, it's $1.06. And manufacturing operations, 86 versus 114. All right, so they got some fairly reasonable cost. There is a couple of higher revenue or higher margin parts of the business there, which are interesting. Now, I usually like to have a look at 3 years of data. Which makes this a little bit more time consuming when they've only got 2 years worth in there. And I usually only really want to look at the revenue side of the business. So intellectual property, isn't that curious? We've got another low and then high, and then 2024 was low and then high. Interesting pattern. And then we've got industrial operations, which has stayed flat, and energy operations, which is starting from nothing. Energy operations is increased a fair bit, added a lot to the revenue overall of the business, which is all right. But then where's all the rest of the money gone? So they've still got general and administrative expenses, which has chewed up the rest of those costs, which means just operationally they've lost 32 mil the year before, lost 6 in the most recent year, and if we go back, they've had some ups and downs as well. General trend of those general and admin costs though, 52, 43, back up to 55 and then 65 with this increasing revenue. All right. So what's our net loss at the end of the day? Brother, talking here, 36, 31. All right, so they made a little bit of money. What do we got? Net income loss, including non-controlling interests in subsidiaries. Service provider settlement. So we've got a one-off payment of 15 mil here, which has bumped it up for this year. So they are making something. Change in fair value of securities, negative 30, which has destroyed their net income that year. And because this is so lumpy, I'm just going to have a look back through because this is where we want to be having some focus and attention. Change in fair value, 31, 263. What? And what are these guys investing in? Wow, all right. So look, I'm not too keen on it at the moment. There's nothing really shining through. Let's just have a look at cash flows and just sanity check it. Not going to bother have a look at the balance sheet just yet. So I got 50 million, 75 million for cash from operating activities. Where do these guys need to invest their money? So I've got patents, net cash and working capital, patent acquisition. Ooh, sale of floor mats. It's floor mat assets. I mean, that'd be alright. Like, how many floor mats you got? What else? Purchases net to oil and gas properties. Alright. So do some investments into various bits and pieces. It's probably why a lot of their prices of their assets has gone up and down, etc. They've done some repurchase of common stock, which is interesting considering they, I mean, they made a bit of money. They put the rest through in investments, but how they finance the rest of it. Borrowings on the benchmark revolving credit facility. That's where they got some cashola from. And a bit further down. All right, is this going to be a business that 100x's is kind of the lens that I've got to look things through? Because otherwise you can find, you can find any reason to want to buy a business, but at the end of the day, you got to have a big filter to find the best. Otherwise, you'll never get through them. So at this stage, this business doesn't really look like it's kind of mastered its customer. Its income and revenues is kind of ups and downs. That may be, until the business is pretty consistent there, it's going to be pretty hard for it to maintain a constant, stride. Margins look pretty ordinary. Doesn't look like there's much of a moat around the business. And how we're spending the company's money here, well, to be able to do that accurately, I'd have to look into the business further and do more of a deep dive. But at this stage, it's not showing me that it's worth looking at further. So, Acacia, don't need to worry about you anymore. All right, what do we got here? Aero Group Holdings. All right. Aero Group. America needs more of eagles and stuff, but otherwise, cool. Oh, what's this? All right. So, if I'm going by this stock may have had its IPO or, been able to be publicly traded pretty much for the last a little over 12 months, so June last year. Since then, minus 60%, which is usually the case, like if this has come out from an IPO or it's the first time that the stock can be traded, it's usually the case that the stocks underperform. And what I mean by that is they're overvalued when you get them out of the showroom. And over time, investors kind of realize that and sell it off because they don't actually want the stock anymore. They don't want to hold it long term. And so there's usually a period of time after an IPO where it's a good chance to invest in the company if it actually performs. Now, usually these kinds of businesses, if they are a bit early, which this one potentially is, they might not actually have an annual report out. This one does. We might have been looking at their prospectus, which is usually what comes out before they get to that stage. All right, Aero Group. So it's in the 10K format again. Let's have a sticky beak at the financials. And you've kind of seen what I'm scrounging around for. We've only got our 2 years here. Do I want to have a look at the prospectus? Probably not. All right, revenue. So we've got 86 to 90. Cost of revenue is 28 versus 36. So there's a pretty good gross margin there. So for every $9 in sales, they get to keep 5.5, which is pretty good. I can see that the cost of revenue has kind of crept up a little bit, but we're only looking at 2 years, so we can't really infer too much. Total operating expenses, biggest increase here is general and administrative. So that's a bit troubling. So usually on a business, like if you look at the most ideal and the best management, we want to see that costs are in control, because at the end of the day, like, you can have the most amazing product and still not turn a profit and burn through money just because costs haven't been controlled adequately. To increase that much versus what we've got here, our revenue's grown a little bit. Cost of revenue's gone up as well, and general and admin's almost, tripled in that time, just in 12 months. So if we're doing a deep dive on this business, we'd really, really want to have a really close look here. Like, is this part of investments, etc.? Where are they putting all that extra manpower into? Or have they just gone and got a U-Butte headquarters and spent millions on it, which doesn't fucking change the fact or change, the profitability of the business at the end of the day. You can have a shack, and as long as people are keen and it's got a good culture to come there, people will want to work for them. That's where the money's at. So what have they done for this year? Still burning through some money, a little bit less this year, but gain, loss on extinguishment of debt. Our loss increased up here. We've got some adjustments here, but nothing crazy. Let's have a look at the balance sheet. So this is in thousands, so that means that's 700 million, 774 million. Total current versus goodwill. Goodwill is a fair whack of that, so that usually comes about because they've purchased part of a business at a considerable premium. That's the word I'm looking for. Significant premium to the valuation that these financial requirements come from. So there is potential that gets wiped out in the future, which obviously doesn't matter too much because we still take away 550 from 770. We still end up with a number heaps bigger than total liabilities, which is a good position to be in. So I don't really have anything that got teeny little bit of, no, it's not even debt. It's just long-term deferred revenue. So long-term debt, net of securities, and current maturities. Sweet. So it's pretty healthy balance sheet. It's obviously primed and ready, with majority of it in cash. Inventory, property and equipment is pretty minimal. Alright, so it does look like the majority of their money and investments have gone into potentially acquisitions and intangible assets and things like that. Let's go and have a look at the cash flow statement. So the business, just looking on those 2 years, doesn't look like it's got crazy amounts of growth. But it has, I guess, looking at the structure and the increase, it's got the potential that it's positioning itself for rapid growth. But that's yet to be realised. Alright, so we're looking here, cash flows from operating activities. That's our net income, comes out here, and then we have these adjustments that occur throughout. So we got stock-based compensation goes back in. Really, I'm just looking at oddities in here. Anything that's a lot bigger than previous years. So we've got a few. Change in fair value, accounts accrued, etc. We've got deferred revenue. And non-cash gain loss on debt extinguishment. So that one comes back out. And we end up with there being cash flow negative for this year, but cash flow positive for the previous. All right. So, an interesting part of the business. It looks like this is too early for me to want to jump in because there are a lot of hurdles this business still needs to reach before it's going to be worth having a look at. Purchase of property and equipment. Where are they actually investing, this cash that they had? Well, it looks like they just increased their cash position. They got proceeds from borrowings, which is coming in, going back out. And cash paid to seller. Interesting that they wouldn't just say acquisition. So it's odd that it's in the financing activities. So you'd want to have a sticky beak in a couple of these numbers. Usually some of these would go in your investments. So purchase property, plant, equipment, and investment in intangible assets. But at this stage, it looks like they've had their IPO, got 140 million from that. Put some of it into repayments of borrowings, party-related borrowings. They've still had some left over. They've then put that into restricted cash and cash. Net increase in cash and restricted cash. All right. So then they're just holding on to it at the moment. So is there anything exciting in this business at the moment? Like besides some nice pretty pictures and potential? Not really. Now, it may in the future. Obviously, it's got a market cap of 300 million versus, what was our revenue? Revenue of 90. So, eventually, over the long term, once the business kind of grows, it stabilizes, it'll have kind of net income that will level out. And it might be an interesting business to have a look at for, the majority of investors from that stage. We obviously want to get on it a bit earlier than that, but at this stage, there's better opportunities for us to have a look at. Now, we'll continue this screen tomorrow and continue to go down through the list and see if there's any other errors or anything else interesting in this list. Hit me up with some other questions that you guys have, because I'll try and answer those in future videos as well. If you don't have any questions, good. That's all right. If you guys have got any interesting stocks too that I haven't come across or screened yet, feel free to drop them in the comments. Let me know, and I can go and have a sticky beak at it and give my 10 cents worth on it. All right. Now, I never just poo-poo ideas that come from other investors. They're usually looking at different things, and it is probably a good way to still go through and assess ideas that you might get as a hot tip and things like that. Let's go. Oh, Jesus. She's a big one. Come on, brother. Yeah, so that's what we want to try and keep an eye out for. We still want to follow a process as we go through looking at businesses, because if we get a hot tip and we just go and buy it straight up, and well, we're just asking to lose money at the end of the day. Come on, man. $138 meg, Jesus. Sounds like a virus. Fuck. Come on, bro. You can do it. Put you back into it. Yeah, so I fucking hate this. All right, so we got this fancy U-Butte format. Yeah, thanks, boys. With a whole bunch of formatting and just fluff. The magic point, so year in review. I just want to get to here, mate. Now, this isn't in our, what do you call it? 10K format. It's a Deutsche payment company with the status of an acquiring bank that allows businesses to accept e-commerce, blah, 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 blah. Headquartered in the Netherlands. All right. So anyway, that's why it's in this weird and wacky format, because they can do kind of a little bit more creativity, whatever they want, really. I'm going to have to enhance for you guys, because otherwise you're not going to be able to see anything of interest. Okie dokie. So we've got our income statement, and part of the rationale that this investor put forward was that it was below value. We won't be doing a valuation of it today, but let's just have a sanity check. So we've got 2.2 billion euro. There you go. 2.2 billion euro to 2.6 in non-interest revenue. Costs for that. Cost of goods sold. So they get a pretty healthy margin. That's huge. So it literally costs them not a lot at all per transaction or anything like that. Net interest, net revenue, boom, and income, pretty much before tax it comes out, blah, blah, blah. What do we got? Wages and salaries, that's kind of increased a bit. Nothing else has grown crazy amount. Other operating expenses. Let's hit the bottom line. Net income for the year. So we've got some growth. So 925 to 1 bill. So about 10%, which is a bit under. It will be a bit lumpy with the other terms that come through, but revenue is growing at a higher rate, which is probably about, 15 to 20%, 2.2 to 2.6. Yeah, 20%. All right. So that's looking pretty reasonable. With that kind of growth rate, it is quite difficult for people to be able to calculate what kind of cash flows that means in the future. So what do we got here? We've got our balance sheet. Let's just quickly look at total assets of 11.4 to 12.2 billion against current total liabilities, sorry. You're doing that to me, are you? So we got total non-current liabilities, total current liabilities, so pretty much 7. 7 against 12, that's pretty good. What do they got in terms of non-current? Lease liability is the main term. They don't have any debt, so that's sweet. Let's have a look at this cash flow. Share capital. Nah, I just want cash. Let's talk cash. All right. So we got our net income. Pops out here. Interest income. Boop, boop, boop. Changes in working capital. All right. So cash generated from operations is 1.6 billion down to 1 billion for the most recent year. You can see they got some pretty big payments that swing here. So they're up. Previous year, change in working capital goes up 700 million. And then it goes down by 1 billion. because we go from 700, take that off, and then minus another 300. So there's a fair bit of swing there. If we didn't have this, this would be 1.3, and if we didn't have this, this would be about, 900. But there are a bunch of other terms in here that swing around, and this number will be a little bit lumpy, we expect that. So where's it investing $1 billion? Now, this is how we can tell how rational management is, especially when they have money, what they do with it. So we've got income comes in, or finance income received. Cool. They get a fair bit of money from that. Income tax is paid. This is so weird. Income tax has been up there. Net cash flows from operating activities. Right, are they still going with Jesus? All right. You get 1.7, 1 billion. What are they doing for investing activities? And where's my financing? Down here. Right. Okay, so where are they putting that money? Still 1 billion. Well, they put a little bit here and a little bit there. Purchase of plant and equipment is our assets and things like that. So 123 million. So roughly just a tad over 10% of that net cash from operating. So we've got free cash flows in here of about 900, just under 900 million. Which seems pretty good. What else we got? Where are they putting the rest of the money? Proceeds from issues of shares. What the hell are you guys doing? Why are you still issuing shares? Are you guys idiots? Is there something I don't know? Anyway, that's an odd one. Why an established business like this would be issuing shares. I want to have a look at that item there to see why. Because they've obviously got a shitload of cash. They don't need to be diluting shareholders. Even if it is a small amount, it's not really a good sign. It's a red flag to look into. Lease payments. So what are they doing with it? They're just stacking cash. Interesting. So it's all retained earnings at the end of the day. So they need to keep making money and expanding their reach. Otherwise, they're not going to continue to grow. So is this business something worth looking at? So it's that I look at building a portfolio with all different stocks can have a place in a portfolio, but it's a matter of what you're kind of building. So if you want to have a business much more like, say, Charlie Munger, who would invest in like ultra concentrated positions, so like 3 stocks, they need to be the most spot on, simplest ideas that have high certainty of the outcome. You know, is this business going to be great 20, 30 years from now? You need to have that level of confidence in that decision. But these guys, you know, you might have a couple of big anchors in your business or in your portfolio that you might invest in and allow them to, you know, larger businesses, you buy them at a significant discount when that opportunity is around and you can hold on to it. So this is a potential spot for this kind of business. It has a PE ratio of 31, so it is priced in for some growth, and it has decreased over time. We may have had some pretty high, lofty expectations here, and it's kind of hasn't reached that. We've probably got some steady kind of growth, but I don't know, there's a bit of an opportunity here, potentially. What you'd need to do is do a deep dive on the business and then have a look at the valuation of it and see if it's worth the discount that's being priced in the market at the moment. And then review that against all the other exceptional opportunities that you've got. But for me, looking at this business, yeah, like it's got some nice growth on it, but it is a pretty sizable company as it is. Does it have the potential to 100x? Probably not. 100x on this would be 3.3 trillion. It may do that over time, like another 50 years, but over the next 10, no. Next 20, no. Next 30, probably not. So that's my take on it. It is stacking cash, so that is an interesting take, but not what I'm interested in looking for at the moment, with looking for the next big thing. All right. So if you like this, feel free to drop any comments below. If you enjoy this wrap, so our wrap for today is Adyen. Yep, definitely worth a sticky beak if you like your larger stocks and you're more kind of blue chip style, with a little bit of growth on it. And our other stocks, Acacia Research Corp and Aero, concluded they're not worth looking at the moment. They may in the future if they continue to grow rev. Tomorrow I'll jump into Amprius Technologies. We've already had a sticky beak at American Superconductor, so we'll continue down our list and keep looking for, or panning for gold pretty much. So if you enjoyed this, let me know. Give us a like, or if you didn't, just jog on, don't watch any more of it, because, you know, I'm boring as batshit. Haha. And otherwise, check out this next video or this playlist because YouTube thinks you'll like it. Cheers, guys.